Hello everyone. Today I want to talk about some good companies to keep an eye on during this stock market crash. Everybody thought the bottom was in, but I personally did not believe the bottom was in, so I waited and I sold some stocks. I sold a share of Apple or two so that I could buy back in when it tanked, okay? I sold at 173. Now, I'm not saying to sell any stocks. I think that the buy and hold strategy is the best. I just sold out to buy something else. So Apple is $167, and I think that it could go back to $140 like it did earlier in this year. Okay, you've seen it tank down to 130, and that would have been a really good price to get in at. And if you did, you would have made some money. I think that Apple could go back down. It could also go back up. Apple does really well during the stock market crash, but I think that Apple has the potential to drop down to $150, which I think would be a decent price point to get in at. So stock analysis says that the low is 137 and the high is $224. So for Apple to be at $224 a share, the market cap would have to be well over $3 trillion, maybe almost $4 trillion market cap. That's a really high market cap, and it's going to take a lot to get to $227. But $180 is obviously feasible. I want to get back in at Apple at 150. So the low is 137. I think it could go below 150. I think that the stock market is not done crashing. I still think we got some hard times ahead. I personally am just waiting to see what's going to happen. Apple is the best company in the stock market. This is why it has the highest market cap in the stock market. It makes the most money. And if you look here, they're constantly making more money. So even in the trailing 12 months, they've made more money than in 2021. Even during this recession, they made, and this is in US dollars, $387 billion. In 10 years, if they keep this up, they're going to have a $1 trillion revenue eventually. They make so much money. And their net income was their net income is $99 billion. So you can tell that this company is doing very well, and obviously it's going to go up over time. That's why everybody invests in Apple. It's not a 10x stock. It's not going to go up to $10,000 a share anytime soon. It would have to have like $10 trillion market cap for it to be at $1,000 or more. I could actually do the math, but I don't feel like it. Their profit margin is 25%. So all the money they bring in, 25% of it is profits. That is a really good profit margin. If you want to look at a good company and compare it to another company, come to Apple, okay? This is the stuff you want to see here in percentage wise. So you can look at their track record. They have a good percentage of gross margin, operating margin, profit margin, free cash flow margin. So they insane positive EBITDA. You look at their balance sheet, they have cash to debt. They have $59 million in cash over their debt. So that's what you want to see. You want to see more cash than debt. And then you want to see them doing well over here. And then you want to go down to free cash flow. And then you want to look at their free cash flow, $107 billion in free cash flow. That's what they use to reinvest in the company. Stock number 2 is NVDA. Now, this company is, I personally believe, overvalued. And if you look at their PE ratio, it does say they're overvalued according to the historical trends of the stock market. And a good value or a good PE ratio would be 15 to 20. Now, doesn't necessarily mean it's bad if it has a higher PE ratio. It just means that they're priced in for growth in the future. Now, NVIDIA did drop down to about $145. So I think that NVIDIA ran up pretty quickly, and I think that it could definitely crash back down. There was the Nancy Pelosi run up, okay? She bought a lot of NVIDIA because she does the market manipulation kind of thing. If there's any market manipulators out there, it's probably the people in Congress. They know exactly what's going on. I think NVIDIA would be a good buy from 120 to 140. So it does have a lot of potential to go up. See, the high here is $455. I do think that in the long run, NVIDIA is going to be a lot higher than what it is now. So for it to get to $400, it would need about a $1 trillion market cap, because you pretty much just double the stock price, you double the freaking market cap. That's what you do. Okay. They have insanely good financials. If you look here, their revenue is constantly going up. 26 billion, not as good as Apple, but nobody else is either. But they're super good and they make a shit ton of money. Their net income growth, so they're making money, and they've made money for the last 10 years. So that's what you want to see, is a company making money for the long run. I believe they're going to keep making money, and they're not going to be losing money. They have a profit margin of 36%. That's really high. That's pretty damn high. That's higher than Apple. So they're doing super good. Their cash flow, they have 8 billion in cash flow. So compared to the company, or compared to the revenue and such, they have a lot of free cash flow to reinvest in the company. Okay, so here's the forecast. They're saying it's a buy. I would say it's a buy at about 150. Personally, you don't have to take my advice. AMD is stock number 3. So AMD is a lot smaller than NVIDIA, and it has a lot more room to grow. Okay, so AMD, if it had the market cap of NVIDIA, it'd probably be about almost $300 a share. So it has a 40 PE ratio, which is a little lower than NVIDIA. And the reason I compare AMD to NVIDIA is because it's like the same thing almost. They make computer parts. So the PE ratio is not too bad. 20 PE ratio would be the best. I think that AMD would be a good buy. I bought in at $91, but I think the better price target would be about 81 or $85 a share, maybe $80 a share. So yeah, here's the low. 85 with a high of 210. I believe one day it's going to get to $200 a share. No doubt about that. All right. So they have incredibly good financials. They make 16 billion in revenue. They make 3 billion in net income, so they're growing their company. AMD is super good, right? They're like Intel good, but possibly better than Intel. Like they're neck and neck. Their profit margin is 19%, which they are profit. The profit margin's lower than Nvidia, but it's okay. They're still growing. They're constantly making money. If you look at their revenue here, they've always had a revenue. But here's the thing about AMD. They just recently became profitable. Okay? So the last 4 years they've been making a profit. So what you want to see is them increasing their profits, and their income went a little lower in the trailing 12 months. So we'll have to see what happens with this company. I still think it's a buy at about 80 to 85 dollars, maybe 90. I think 90 would be good too, because it did go up pretty high last year. They have a positive free cash flow, 3 billion, so that could be reinvested. Okay, here's another one. Everybody knows about this one. Google my Google. I think Google is like possibly the Apple. I think Google can take over the world if they wanted to. They have a very good steady PE ratio. They don't give out dividends, so they don't give away their profits. A market cap of 1.5 trillion. So for them to double their stock price, they're going to have a $3 trillion market cap. So if you want the stock to double, it's going to take a lot of work for it to do that. Their revenue is very close to Apple. So that's why they make a bunch of money. I mean, that's why the stock's worth so much. So their revenue is $257 billion. And it's a steady increase every single year from the last 10 years. Look at that steady ass increase. Bam. Every year they increase their revenue. That's so good. That's so good. Such a good company. And then their net income, bam, every single year except for 2017, they increased their net income. They have a profit margin of 29%. That's really good. I mean, I think Google's coming out with some more stuff as well. I bet. Free cash flow, 67 billion, so they have a lot to reinvest. Let's see the forecast. So it has a low of $114.13. So that's the low, right where it is right now. It's literally at the low. It's considered a buy, and their high price target's 196, and the average is 148. So the reason I'm talking about these stocks is because it's very possible that the stock market crashes even more and these stocks come tumbling down, and we can just like get into these ones to like hold our money safely. There's these speculative stocks like GCT, Rivian, SoFi, speculative, not profitable companies Well, GCT is profitable, but we invest in these unprofitable companies and lose a bunch of money, right? We don't want to lose half of our money. So we could invest in good companies like Apple, AMD, NVDA, Google, right? You invest in these companies and you'll slowly build your money over time while you, with like 50% of your portfolio, you invest in good things like ETFs and good companies where you slowly build your money, and then you can, like, screw around on the side. That's what I do. Okay. So I like to slowly make money, half of my portfolio, and then possibly gamble with the rest. Possibly like 75% in good companies, because you want to make money by the time you retire, right? You just want to have a bunch of money later on. And if you could sell out anytime you want. So for the market crash, hopefully it will go down a little bit more. Good time to invest in it. And you just got to watch for these companies. Like, it's companies everybody invests in. Number 5, Amazon. All right, so Amazon ran up recently a lot, right? I was really hoping to get in when it was $100 a share. That would have been a good time to get into this company, but I think it still has some tanking to do. I think the stock market's going to come back down. Their PE ratio is 123, which is extremely high, way higher than Google's. So that means Google is worth more than Amazon in a way, because Google has a higher market cap and a lower PE ratio. So Amazon's more priced for growth. They have no dividend, which means they don't give away their money that they reinvest into their company. They have a revenue of 485 billion. That's the highest revenue of all these companies, but they have a net income of only 11 billion, which is a super, super small profit margin. So obviously every single year they increase their revenue, and then their net income, they increase it every single year as well for the last 8 years or so. So since 2015, they've increased their revenue every year. Their profit margin, 7%. So they have a really low profit margin. You want to see a like 20% profit margin in a company. I think that Amazon probably is going to go back down because the PE is really high. I want to see the PE at around 50 or under for Amazon before I get into it. It has a low of 111 and a high of 244. It has a really high market cap of 1.36 trillion, a little bit under Google. And I think $100 to $110 a share would be a good price point for me to get in. I don't know the exact prices that it's going to go down to or what exact prices to get in, but I don't want to buy into an overvalued company because the stock market ran up, which is a bear trap. Half the stock market investors think it's the bottom, the other half think it's a bear trap. Everybody's on edge, so it tanks down even more. And well, that's about it. Those are the 5 companies that I think would be good companies to watch out for and set some good price targets at to get into. I think that some of these companies you could just get in right now and it will eventually go back up if it tanks. You might lose your money for a little bit, but it's definitely going to end up going above the price it is now one day in the future. But it's definitely better to buy it on the dip. All right. I hope I could give some good information here and, just remind everybody that it's okay to invest in these big blue chip companies if just to have a solid foundation of your portfolio. You want a solid foundation on your portfolio. And I definitely think that ETFs are the best way to create a solid foundation for your portfolio. One of my favorite ETFs is VTI. It's the Vanguard Total Stock Market Index Fund. Not the world, but the US stock market. Okay, it has 4,000 holdings and it's slowly over time it goes up. In the last 5 years, it's up 66%. So it slowly goes up. It's recommended you hold these ETFs for 10 years or more because over the 10-year period, it's going to go up a lot. So it doesn't go up fast, but it goes up over time. You're not going to like 3,000 extra money with the ETF, but it's for a good retirement. And on GCT, I made more of a return than I did on VTI in one day. I got a 300% return. So that's why you just slowly over time invest into a good ETF. And then you'll go with the ups and the downs and the ups and the downs. And then when you're 50, you can retire with probably 1,000% increase. Just, 10% a year, whatever, compounded. But that's all I really got for today. Please like and subscribe if you enjoyed the video. Have a good night.